Hello traders, this is Dave with the Compass Options Live Trading Room and Alert Service, and just going to do a video tonight, Periscope. Just kind of recover the recent trades we've taken, kind of show the results from September through February, and go over some specific charts. And we're going to talk a little bit about HYPOTHETICAL as well as the methodology that we use to achieve the results we've been getting, which are pretty spectacular actually. So let's move ahead with that. Again, all the signals and trading opportunities we provide here for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors. So we won't be giving financial advice. All right, so I just kind of want to show the couple of SPY charts here. This is a SPY, the S&P 500. This is as of Friday, this past Friday, 23rd. Again, we keep breaking out to all new all-time highs here, and it's been quite a nice run up since November, and touched a high most every day. We had a little bit of a pullback here. We had a little bit of a pullback the first part of January right here, but it keeps on going. So these are standard candles because I'm going to talk a little bit about Fibonacci candles tonight as well. So I wanted to show you a same SPY chart, but with the Fibonacci candles. And one of the things that Fibonacci candles do is help you identify trends easier than regular candles do. And you see these flat bottoms are bullish candles, flat tops are bearish candles, and that's a good way to identify those. So we'll cover that a little bit in this Periscope video. So what we have in the room, again, I have a room, and for all the members here, people know this is a trading room where I trade stocks from about 9:15 each day we start. So I'm here from the market open to the market close at 4 o'clock. And I also have an alert service where we send out alerts on the high probability trades we take. So this is kind of going to go some of the rules we trade by. First key here is we're trying to only trade the very high probability trade setups we can find. So we trade the best and we skip the rest. And again, our objective in the room and on the alerts is not to make trades. Our objective is to make money. We make money by taking the very best trades that we can find and only trade those and bypassing the rest. And I'll explain briefly how we do that. And also profitable traders, which a lot of our members are, need an edge. The edge, we have 4 different edges here. We have the Right Line Compass system, which I'll cover here briefly. Everybody who's a member, I'm sure, knows about it. The Compass system is the system that allows us to identify when institutions are in the trades and where they're not, and that's critical. We also, a second key thing here is we trade relative strength and relative weakness. This is the relative strength of a stock versus the SPY on 5-minute candles, or relative weakness on the SPY on 5-minute candles. It's very important because if you've got a stock that has relative strength to the SPY is moving flat or moving down, and the stock you're looking at is moving up. That's relative strength, and that the stock will then outperform the SPY if the SPY turns against you, and you're able to get out with a small loss or a small win, but you're not hurt as bad in a reversal. We want to trade with the market trend if there is one. This is really important. And we also buy at support and sell at resistance, and our near support and near resistance. In other words, we don't want to chase stocks. So these are the key edge that we have here. Again, we use the Compass system. This is kind of a graphic of the Compass system on Thinkorswim. It identifies the highest probability trade setups, while side-stepping trade setups that look good, but will fail more often than they succeed. And we do this again by identifying when institutions are driving the move and when they're not. And the Compass software analyzes complex trading data and displays results in an easily identifiable visual format. And this visual format makes it easy for even new traders who don't have a lot of technical analysis experience to find high probability trades. Okay, so again, we want to get an edge over retail traders, and we're going to talk about how we do that in the room. And again, who are institutional traders? We know institutional traders are investment banks, hedge funds, mutual funds, etc. All of those are the folks that can drive a market. We can't. So we only want to take trades that are being driven by institutions. We want to trade stocks with relative strength, as I just mentioned, or relative weakness versus a SPY, or the Qs in the case of the techs. And we want to trade in the direction of the overall market trend for the day at least, and on the daily chart as well. Again, how does this give us an edge? Our trades are going to be supported by institutional buying or selling, and this is very important. The institutions, we want to only be in the trades the institutions are in, either long or short. We don't want to be in trades with a bunch of retail traders in there, causing all kinds of chaos in the market. We'll have stocks that are outperforming the SPY and stocks that are moving in direction of the overall market. Very, very important to have this kind of an edge over retail traders. And our compass system and our looking at relative strength and relative weakness, our criteria here gives us an edge over the other retail traders who don't have the same information we have. Okay, so this is a basic high probability trade setup funnel that I like to show. Some of you may have seen this, some may not. The key thing we look at here is when I look at a stock, I want to make sure the daily chart and the 5-minute chart are aligned. So if I'm thinking of going long on a chart that looks good on the 5-minute, the daily chart also has to be bullish. I only want the daily chart and the 5-minute chart to align. I don't want to be taking any counter trend trades. We trade with the trend, both stock and the market. So if the stock is bullish and going up and the market's bullish and going up, then we want to trade long, and vice versa. Obviously, the compass indicators need to align that I just showed you. We want to know the institutions are in there. We trade relative strength and relative weakness. As we talked about here earlier, we want to take a stock with relative strength. If the market's going sideways or moving up slightly, we want to take a stock that's even stronger than the SPY. It gives us an extra edge. And again, enter near support or resistance. So don't chase stocks. All right, so that's basically what we call a trade funnel. So again, I want to just run this again for anybody who doesn't know how we try to find the highest probability trade setups in the room and on the alert service. We identify the market trend for the day, if there is a trend, and trade in that direction. A lot of times the market's choppy, you don't have a trend, but you're certainly not going to know what the trend is until the market's been open for about a half an hour or so. So typically we're not taking any trades before 10 or 10:30. The stock to be traded should have a daily and 5-minute chart aligned, as I just said. The compass indicators must align in the direction of the trade. If you're going to go long, we want to make sure that the compass indicators are telling us that the institutions are long. That's really, really important. We don't want to be trading against the institutions, or if the institutions aren't even in there. Again, stock should have relative strength and relative weakness to the S&P 500. It should be above the VWAP on a 5-minute chart for longs and below the VWAP for shorts. VWAP, the volume weighted average price, is a very key level that the institutions use, and you don't want to be trading long if the stock price is below the VWAP, or short if the stock price is above the VWAP. And again, we want to enter near confirmed support for long and resistance for short. In other words, we want to come in at support levels when stock comes down, hits the support level, and confirms a bounce back into the original trend. That's when we want to get in. And again, you want to look at your daily chart and make sure there's no nearby support or resistance that's going to limit your profit target. And the key thing that we always mention is have patience. It's really, really important to be patient. And a lot of times you have to wait. I mean, you have to sit in your hands. You just have to wait for those high probability trades to come your way. Again, this is basically the same thing we just talked about. We'll talk a little bit about the Fibonacci reversal candle here. And this pop out of the box signal. I'll cover some of those. But this is basically just the same criteria we just covered. All right, so in the trading room and in the alert service, for folks who may not be familiar with everything we do there, here's the strategies we use. We do straight calls and puts. Pretty basic, straight buy calls, buy puts. We do debit spreads using weekly options expiration. This is a little unusual. A lot of people don't understand that you can make really, really good money doing debit spreads if you use a weekly options expiration date. So anytime I do a debit spread, the expiration is going to be the coming Friday. We do time spreads over earnings, or what's called a calendar spread, to capture the volatility crush. These are non-directional trades. We don't care which way the stock goes. We only want to catch the implied volatility crush when the earnings come out. I also have a weekly ATM strategy. This is basically a strategy that sells premium week after week after week against a longer term dated put. It's basically just a selling premium strategy to capture time decay multiple weeks in a row and protecting ourselves with a long put further out in time. And we do credit spreads. We do quite a few credit spreads to capture premium over a few weeks. And I also have a system called SPY Super System. These are for very high probability trades to catch the SPY moves or the Qs. These are we call out in the room. We don't alert on these, but because they're very, very quick trades usually. All right, so those are the strategies we use. I just kind of want to cover, and I guess everybody in the room will probably be aware that this is what our results have been looking like, but this was September 2023. And if you can look at here, you'll see the percentages we made on the trades. This is pretty common. You don't see any 200, 300, 400% gains here. You do see like 108. This was a really good one, but typically they're going to run between 15 and 40%, generally speaking. And again, in September, we had I don't remember how many we had here. We had $2,000 invested in each trade, created a profit of $71.88. I think we had a 92% win rate in September, and so it was pretty strong. This was October. We had 24 wins and 4 losses, 86% win rate, 2,000 invested in each trade, created a profit of $44.80. And again, you can see the percentages are very consistent, very consistent. JD was a nice 61%, RH 43%, but yeah, McDonald's only 10%. And we had obviously losers. We have some losers. Everybody has losers, so do we. The November trades, we had 21 wins, 4 losses, 84% win rate, but we made more money. And when I say 2,000, which I'm just using a baseline here, if you put $2,000 into each one of the trades that we take, it gives us this kind of profit, just so I have some sort of a baseline that I can use. But again, this was November trades. We had to put credit spread here. We had a strangle here, and we had some losses. A couple of put credit spreads that were nice, and 40% on this 5. This was a nice strangle. So pretty nice trades in here through November. This was December. We didn't do a lot of trades in December. Slow market, holidays, not much going on. A lot of choppy days that nothing really popped up. So we had 14 wins and 2 losses, only 16 trades, 87.5% win rate, and 2,000 invested in each trade, net $3,115. And we had a couple of losses in here, as you can see, but decent profits. 36 in McDonald's, 63 here in Microsoft. This was a nice one, and Microsoft again for 31. So a pretty good month of December, even though we didn't take a lot of trades. January was a really, really good month. We had 20 wins and 2 losses. The 2 losses actually didn't occur until after the month was closed. They were trades that we put on in January, but closed in first part of February. But I included them in the January results here to try to be as transparent as possible. But we had 20 wins and 2 losses. 2,000 invested in each trade, netted about $7,500. So that was pretty nice. We had a big loser in Gilead here. Had some news that went against us and that killed that trade. But other than that, the trades were pretty nice. We had some pretty nice ones here. We had a couple more. Another credit spread, a debit spread, a time spread. We spread it out quite a bit. This Mara was a nice trade at 65%. Microsoft again, 25%. Zim was another nice one at 43%. So we had some nice wins in January, and in February so far, this is February results so far: 15 wins and 2 losses, 88% win rate. So you see we had 20 and 2 here, and we got 15 and 2 here. So we got 35 and 4, 35 wins, 4 losses through January and February of 2024. That's how we've started the year so far. 2,000 invested in each trade right now, netted 68.77. And I did break out the alerted trades in February. I haven't done this before. It takes time to break out the trades, but the alerted trades, February, we've got 12 wins and 2 losses, 2,000 invested in each trade, netted 42.22. A little bit less because we call out more trades in the room than we can alert on, because some of them they're too quick or too late in the day to get the alert out. That wouldn't be fair to the folks on the alert service, but this is basically the alert, so we can see what we did in the room and what we've done in the alert service. So that's a pretty good start to the year, and this is normal. We normally trade 85 to 92% win rates, and we do this month after month after month. Room's been open now for people that know this, but this is with 3rd year. So we've been open, this is 26 months right now, and we've had one small loss and one loss of about $1,000, one loss of about $400 on a month. Other than that, 24 months out of the 26 have all been profitable. And it's the trading high probability trade setups with the criteria we've got is a really, really solid strategy. And I think a lot of people we have in the room actually have been in there since we started, and they're still in there. So that speaks volumes about the room's performance. All right, and again, this is just kind of an overview of the 2023 trading results using it $2,000 per trade. And not everybody does this. I mean, a lot of people, including me, vary my trade size depending upon the kind of market we've got. If I've got a trending market, I tend to trade more higher, take a bigger positions. And if it's a choppy market, then I'll take smaller positions. But in order to give some sort of consistency here and some kind of a baseline, I always use $2,000 in each trade. In the Compass Options Room, it produced a profit in 2023 of $60,208. So a little over 60,000, pretty nice. And if you had an account balance of 50,000, each trade used 4% of the account when the year started. Again, the percentage used was lower as the account grew, and it produced 120% return on the initial 50,000 account, growing the account to a little over 110,000 at the end of the year. So that's pretty good return, 120% a year, pretty nice. I mean, if you can do 100% a year, that's pretty nice. So at the end of the year, the $2,000 per trade was less than the 2%, was less than 2% of the final account balance. So you went from 4% of your account in each trade to 2% of your account in each trade. And if you went up to 4%, you would be putting 4,000 in each trade at the end of the year. It's just that, again, that's your risk tolerance and how you want to trade that. But I just want to show this with the results based on the 2,000 a trade. Okay, I want to talk a little bit here about Heikin-Ashi candles. I had a lot of people ask me about this. I've shown it in a couple of webinars recently, but a lot of people ask me about Heikin-Ashi candles and what the advantages are over standard candlesticks and how we use them in trading. And if you remember the room or you're thinking of joining the room, I have videos on all of our strategies, but I have a specific video on Heikin-Ashi candles, how to read them and how to trade them. But Heikin-Ashi candles, the advantage over standard candles, it identifies confirmations of trend reversals. This is a really important concept. If you're trading it into a trade on a pullback and then a bounce, if you're looking at regular candles, it's much more difficult to tell if you've got confirmation of the bounce than if you're looking at Heikin-Ashi candles. Heikin-Ashi candles, when you get a reversal and a Heikin-Ashi candles shows you a bullish reversal, bouncing off a support, then you have confirmation automatically just off that Heikin-Ashi candle. That's a big deal, makes it much easier to trade it. Allows trade entries on a confirmed reversal, again, avoiding failed breakouts. Again, this is kind of goes part and parcel with this. If you can confirm the trend reversal, then you're not likely to, you're going to avoid a lot of failed breakouts that you wouldn't be, that you would have failed with on if you weren't using Heikin-Ashi reversal. In other words, it'll pop off the support level on a regular candle and then fall right back through it again. You wouldn't have been into that trade if you hadn't used Heikin-Ashi. You might have been into that trade if you were using regular candles, and you would have had to exit for a loss. It smooths out the price movement to eliminate noise. Allows traders to stay in trend trades longer, avoiding shakeouts. And I'll show you some charts to show you how you can stay in the trade and not get shaken out of the trade based on watching a Heikin-Ashi. It also identifies waning trend momentum to exit for profits. So when you're in a trade and the Heikin-Ashi candles are showing you a nice trend, you can see when the momentum starts to fail, and then you can exit right there and get out for profits. And it makes it much easier to visualize the current trend, as we'll see. All right, so this is just kind of a graphic of Heikin-Ashi candles, just to explain to you what they look like and how you read them. Obviously, this is a bearish. Heikin-Ashi candles always have flat tops for bearish candles and flat bottoms for bullish candles. So in this case, you've got a Heikin-Ashi bearish candle followed by candles with wicks and tails. No flat top, no flat bottom. So these are just dojis. You know, one thing to notice is you notice that each candle starts in the middle of the previous candle. It always starts in the middle of the previous candle with a Heikin-Ashi candle. But what you've got right here, when you've got a wick and a tail followed by a flat top, that's a Heikin-Ashi reversal. It's actually not a reversal. This is a Heikin-Ashi confirmation or continuation candle. So you've got a downtrend, and you're getting dojis here with wicks and tails. Then you get a flat top. This tells you that the downtrend is now confirmed a continuation to the downside. And you can see that it just keeps on moving down with a little bit of a wick, but not much, followed by a flat top, flat top, flat top, and then a wick and a tail. Now when we get down here, we're starting to get wicks and tails on green candles. So the market is starting reverse here. So if you were short here, when you see something like this, you'd want to get out. Now here we start to bounce up. See, we've still got a wick and a tail, but here we've got a flat bottom candlestick. This is a Heikin-Ashi reversal to the bullish side. This is a bullish Heikin-Ashi reversal right here. This candle is creating a Heikin-Ashi reversal, so this is where you would want to get long. And you notice that the candlesticks again start in the middle of the previous ones, but here you've got a flat bottom, a flat bottom, a flat bottom, a flat bottom, a nearly flat bottom. This is a nice bullish trend. So that's how you identify Heikin-Ashi reversals to the bearish side and to the bullish side. Or Heikin-Ashi confirmations or continuations. This would be a continuation to the bearish side. All right, so this is a chart of Tesla right here. This is a 5-minute chart of Tesla. This is a trade we actually took in the room. The compass system here is showing us all green. This tells us that the institutions are all are buying the heck out of this thing. We've got candles, we've got indicators here. We've got long-term trend. This is multi-time frame momentum, current time frame momentum, and money flow. But all of these, either if they're green or blue, they're bullish. So we know that on this 5-minute chart that the institutions are buying the heck out of Tesla right here. So what we look for is a Heikin-Ashi reversal. So you see this, the red candles here with the wick and the tail, small candles. And then we get a flat bottom and another flat bottom, and the compass system produces this pop signal, or a pop out of the box signal, which tells you that you're coming out of compression. And we're coming out of compression right here on a Heikin-Ashi candle to the upside. Get a wick and a tail, flat bottom, and it's coming off of this 15 EMA. This little green line is 15 EMA that the compass system produces. The compass system produces these pop signals, and this is where we get in. And you can see, you can just notice that the candlesticks stay flat all the way up. Flat bottom, flat bottom, flat bottom, flat bottom. Here we go, wick and a tail. We're losing momentum. Take your profits and get up. All right, that's how you read these Heikin-Ashi candles. This was one we had in Gilead. Again, this is an entry on Gilead on a 5-minute chart. You can see we get the 15 moving up here. You can see the compression we've got here. Everything goes to green, so we know that institutions are buying. And right here, notice we got wicks and tails, a tiny little wick and a tiny little tail, and then a flat bottom. That's a Heikin-Ashi reversal right there, which is where we bought it. And you see the stocks, they stay mostly flat bottoms. You start to get some wicks and tails. You could exit here if you wanted to, but you're still green here. So we know the institutions are still in, and we go right back to a Heikin-Ashi flat bottom here. Now we're starting to get some momentum loss right here as the 15 starts to move a little flatter. So this is where we would get out of the trade right here. But that gives you a nice move up here on Gilead. Again, this was Gilead. This was a daily chart of Gilead. Again, you can use it on your daily, you can use it on your 5-minute. And here's Gilead daily chart right here. This candle here, you barely can see this, but this has a wick and a tail on it. This has a flat bottom. That's a Heikin-Ashi reversal right there, coming off of this 15 EMA, this little green line right here. That's a 15 EMA in the daily. This is where we get the Heikin-Ashi reversal on Gilead. This is where we took the trade overnight, right there. This was GE. This is one we took a while back. We had to stay in it a while to make money on it, but this is where we get in. And again, you can see we had everything went green here except for the long-term trend. But the long-term trend was kind of yellow because it had been chopping so much. But we did get a pop here, and it popped right out of a Heikin-Ashi reversal here on this breakout. So the Heikin-Ashi reversal gave us a confirmation of a breakout of this compression. So we took it right here. And again, this was another trade that we we made some money on. I think, I can't remember, but this was how we entered. That's how we found it. Every trade doesn't work, of course, but this is how you find Heikenhachi reversals. This was Teva. This is a chart of, I used TC2000 as well to do some deep diving for technical analysis, but I wanted to show you what Heikenhachi looks like here. This is a Heikenhachi on Teva. This is where we get into Teva. Right here in this Heikenhachi reversal, you see the red candle with the tail, followed by a flat bottom, flat bottom, flat bottom, flat bottom right there. This is a nice move up in Teva. It was a perfect place to get in. This white line on here, by the way, is the 8 exponential moving average, which I use on my TC2000 charts. And again, this is all the information I use when I'm giving out trades in the room and sending out trades on alerts, just so you know where they're coming from. All right, so this is QSR. This is one thing I like to show for the room and for anybody interested in the service. This was a daily chart, and you can see that it just went from yellow here to blue and green. So this was a nice breakout in QSR in the daily chart. So I wanted to trade it long, but I wanted intraday trade it, as it turned out. And this was QSR on the 5-minute, based on this candle here. This is where we get in. So we watch for a compression. You see how the stock is just coming along the 15 right here, 15 EMA, and we go from yellow here to green, right across the board here. Everything's green. The institutions are back in. This is where we get in, right here in this candle. See the doji sandwich, the doji candles, followed by a move to the upside. So this is where we took the trade on QSR, and this is where we get out of the trade on QSR. Notice that went yellow, everything was green. Compass system is telling us the institutions are buying in here, so we want to trade along with them. All right, this was a trade we had in KHC, and I'm just showing this because I want you to see what the Compass system does for us. This is a daily chart on KHC. Again, we actually get in right here on this pop signal as the stock came out of compression. We didn't get much movement the next day, but the day after that, it capped up on the open, and we got a nice profit out of KHC coming right off of the institution buying, which we knew the institutions were buying. We could see clearly on the Compass system that the institutions were in there buying. UNH, we could see the institutions were selling right here. See the red and yellow, that's bearish. And we had a breakdown right here. You see the pop out of the box symbol to the downside. The system is the stock is breaking down off of there with a pop signal to the downside. And it's a nice little move to the downside. We had a nice profit in UNH short. So again, I could show a lot more charts. I'm not going to. I just wanted to cover the how we've done so far this year for our members, and for if anybody who's interested in this in the service or the alert service or the room, just to kind of show you what we try to do. I mean, the whole point here is to take high probability trade setups using a specific criteria and only trade those. And that's what gives us an 85 to 90% win rate and consistent profits month after month after month. And the trading room goals that I've been trying to accomplish, I want to help members become consistently profitable traders under all market conditions. When we first started this room in January of 2022, that was the beginning of the bear market. And we had a bear market for 16 months. And we made money every single month during that whole 16 months, the bear market. Now we've been in a bull market for several months, and we're making money on the bull market every single month, pretty much, except 2 small losses, but basically every month is profitable. So we try to trade under choppy conditions, trending to the upside, trending to the downside, bearish market, bullish market, we don't care. We're trading highest probability trade setups and following the market. If the institutions are in there, we're in there. And that's how we make money month after month. Another goal is to teach the members the most effective use of the Compass system, how we use the Compass system to find high probability trade setups and how to know whether the institutions are in there or not. Compass system tells us this. It gives us a huge edge. Also, we want to educate members on identifying and trading the highest probability trade setups while being patient. This is really critical. We only want to take the highest probability trade setups, and members in the room will point out stocks. I'll bring up the charts. We'll talk about them. If I see a high probability trade setup, I'll shout it out of the room, let people know that this is a nice setup. Doesn't mean I'll take it. I'll tell you when I'm going to take a trade, but I'll also find trades that also look good because a lot of members will be taking those trades as well. I mean, I can only manage so many trades. And again, I want to accomplish these goals in a relatively low stress and disciplined environment. This is really important. A lot of rooms are scalp rooms, hyper scalping rooms. They're looking for these 700, 800% gains on every trade. It's basically an antacid type situation where you got to have something to antacids to take all day long because you're stressed out. You can't trade like that long term. You need to be able to trade in a low stress environment, in a disciplined environment. Trading should not be emotional. You shouldn't be on a basically a high every time you get a winning trade, and depression on every time you take a losing trade. It needs to be very disciplined. It needs to be methodical. So that's what we do here in the room. We take a strategy, and we have a method we use. The method works, and we make sure we're disciplined that way. And that's what we try to do. And I've got lots and lots of people who like to do that. We also have, by the way, a Discord room. Even if you're a member, you may not be aware of that. But we have a Discord room where we have 2 professional traders who go over high probability trade setups every day as well, post charts in the Discord room, and you can get in there and talk to them live. So we've got a lot of assets for traders to learn, because that's what I'm trying to do is teach. I'm trying to teach all day long. I'm posting charts all day long, talking about the charts, showing trend lines, showing resistance levels, etc. Everything that people need to know to become better traders. I won't go over this. This is doing put credit spreads. I have a video on put credit spreads as well, and I have one on debit spreads, and I have one on HINDSIGHT candles. All these videos, if you're a member of the room or a member of the alert service, you'll get to see all of these videos, and you can use them they're about a half an hour each. That's how you will learn the strategies that we use. So again, the stocks that I just wanted to point out some stocks I'm watching for Monday. These are the bullish stocks I'm watching right now: FAST, ECL, EVH, GDDY, and BALL. And I'm also looking the bearish side. I'm looking at Nova, the GH, Wolf, and AZUL. All right, so these are the stocks that I'm looking at bullishly and bearishly. And what I will tell you is the entry criteria if you want to get into a trade, and this is not for just for those trades, it's for any trades. Look for long entries to break over the previous day's high with a high probability trade setup before you get into them. So if you like a stock long and you're watching it the next morning, make sure that it breaks over the previous day's high, and it's a high probability trade setup. It meets all our criteria, and the market is moving up. For short entries, you look for them to break below the previous day's low with a high probability trade setup. That means the daily chart is bearish. The 5-minute chart is bearish. It's got relative weakness to the market. The compass system is showing you the institutions are selling. Those are what a high probability trade setup is. And again, try to take the trades that are trading with the market trend. Bearish day, you key on these. Bullish day, you key on these. So that's just kind of a wrap up of what we've accomplished here in the last few months. The room's been open for into a 3rd year now, and that's a recap of our trades that we've taken in January and February so far. For everybody in the room, I wanted to just cover that, but I know other folks are interested in HIPOTHETICAL, so I wanted to cover that as well. So I very much appreciate you listening to this particular webinar, the Periscope video. So again, appreciate it, and everybody have a successful week this week trading.